Welcome, Benjamin. Thank you so much for coming. Actually, interesting week we had last week.
Yeah.
We saw lots of plunges, declines in the emerging market, especially in the Turkish market. What's going on in the emerging markets?
Well, you know, last week, first we saw Brazil be the biggest decliner, the Bovespa index, and then the following day we saw Turkey have its worst day in terms of the stock exchange in more than a year. You know, it's just really this overall global risk aversion right now that we're seeing really across emerging markets. There's a couple of things going on a macro basis. You have concerns over U.S. growth slowing. You know, there's kind of whispers that perhaps we could be heading towards a second recession in the United States, and that's the big concern.
Because everyone is talking about Rubini, Faber. You're right.
You know, there was all these concerns, and then in addition to that, you know, you have this continued concern over the sovereign debt crisis in Europe.
Let's talk about the central bank, Turkish central bank. Was it smart for central bank to intervene with the interest rate to protect the Turkish lira against this European crisis? Was it a smart move?
Well, I mean, that's the big question right now. I mean, you have countries really all over emerging markets that have been raising their interest rates, and then you have, you know, Turkey's central bank last week cutting it. So, you know, investors were a little bit, I think, kind of wondering how this is all going to play out, because you know, it's certainly, compared to what's going on elsewhere in emerging markets, an unorthodox approach. You have, you know, a 0.5 percentage point cut to the benchmark rate. It's not the first time that Turkey's cut rates, and while that's all happening, you have Turkey's big current account gap. Big current account deficit just sitting there.
It's widening, yes.
It's widening, right? You have, last week, for example, Moody's Investors Service mentioned this as a concern to Turkey's positive ratings momentum. So, you know, the worry is if you cut the benchmark rate in Turkey, Turkish assets could become less appealing to foreign investors. That could impede foreign inflows, and that's a lot of the money that Turkey is depending on to fund that current account gap.
What do they want to see? What do the foreign investors want to see from the central bank then? What do you think should be?
Well, I mean, I think at this point they're just really trying to figure out what the strategy is.
Okay,
they're going to do. Yeah, because I mean, you know, you have, you know, take a country like Brazil. You know, Brazil's a, you know, big emerging market, and you know, they've raised their benchmark rate 5 times this year. Now Turkey, you know, which has its currency has actually been the worst performer over the past month, the worst performer this year so far, and the worst performer over the last 12 months in all of emerging markets, cutting its benchmark rate. So I think investors are a little bit kind of perplexed as to exactly how this is going to play out. Now, you know, it could very well be, you know, 2-3 years from now we're saying, wow, you know, they got it right on the head, but it's certainly an unorthodox approach compared to what's going on elsewhere.
Okay, and that brings me to my last question. Okay, we see the European debt crisis, we see the American economic indicators coming very negative, and we also see the rumor, we hear the rumor from Standard & Poor's, maybe a possible downgrade of AAA credit rating for the U.S. We're looking into reasons for the Istanbul Stock Exchange, this decline. Do you think that last rumor could be possible? Do you think it played any role in that?
Well, I mean, I think that just concerns about, you know, the U.S. economy. It's the world's biggest economy, and you know, so much of foreign investment comes in the form of dollars, comes from U.S. investors, and you know, there really is anything that happens in the U.S., any concern about a potential downgrade, any concern about a slowdown, and there were, you know, a series of pretty negative numbers by all accounts in the U.S. last week. That spooks any emerging market. In addition to that, you know, in Turkey, you have a situation where in 2009, after the Lehman situation, the Turkish economy lost, I believe it was 4.8%. So, you know, you really have kind of a concern in Turkey, and that's what the central bank said was their rationale for cutting this rate last week. They want to avoid that kind of slowdown, even though they did grow 11% in the first quarter.
That too, right? Yes.
So investors are wondering how this is all going to play out.
Perfect. Thank you so much for coming and giving us your valuable comments. Thank you.